Federal Reserve had their meeting last week. We saw what we needed to see there. And non-farm payrolls came in slightly softer than expected, with a downgrade to that big number we saw last week. Bond yields fell sharply. TLT stock, the ETF for U.S. Treasury bond yields 20 plus 20 and 30, moved up. Is this time for a rally? I say no. And I kind of called the bottom there. I said this is too far, too fast, and we'll likely see things moving around. I started selling puts, just bringing in some premium, not much. Didn't want to put on too much risk, but it's free money. Now we've seen a big rally in TLT. TLT stock, the ETF, has kind of rallied up pretty high, and I think that's about it for right now. There's still a few things that are going to be weighing on the overall bond market, namely the deficit, thanks to some tax cuts to billionaires. The tax cuts that were provided a couple years ago, the deficit is now feeling it. You should see the chart. Let's jump in and I'll show you what I'm looking at. Before we jump in, if you are just joining me for the first time, thanks so much. This channel is growing quite rapidly. What I do here is stock market analysis, and I break down the individual aspects of the broader stock market. I look at, of course, TLT stock, SPY stock, USO stock, XLE stock, a bunch of other stocks, GLD stock, UVIX stock. I look at the broader stock market, kind of pull together all the nuts and bolts. Nonetheless, thanks for stopping by. I know this channel is starting to grow really fast. This is a breakaway channel for me. Make sure to hit that like and follow button. Let's take a look at, this is the U.S. deficit. And over the past 4 quarters or 4 months, we have seen some pretty sizable gains. This is what's really driving the big bond market move that we've seen over the past couple weeks. There's so much paper hitting the market. The United States Treasury had to flip, what was it, early last week? They came out and said, listen, we're not going to be selling as much 10-year simply because there's too much paper, that they flipped to 2-year. So the deficit's really driving this. And while the deficit has been growing and growing and growing for some time, for eternity, there's a multitude of reasons why the deficit continues to grow. And over the past 4 months, we've seen a bunch of shifting from this. There's also other things going on. 2 elephants in the room are no longer buying that treasury. The United States Federal Reserve is shrinking its balance sheet. They are no longer rolling over and buying and consuming as much treasury debt as they can. They're shrinking their balance sheet. I have that chart coming up next. Also, China. China was gobbling up at a pretty solid pace any paper that hit the floor. So you have your 2 biggest customers no longer there. Plus, you've expanded your supply. Yes, of course, treasury yields are going to go higher. Again, there's a multitude of reasons why this is going on. We've got, of course, the expansion of what Biden did with transportation and everything else, the infrastructure programs. These are starting to hit. We're seeing some deficits there. The tax cuts, they never work out. I don't know why anybody ever believes that. You want to do a tax cut? Do a tax cut. I'll play the market on whatever you tell me. That's my take on this. But we've seen some big moves. We continue to see bigger and bigger moves. The United States federal government is going to have to shift. They have no ability. Here is the United States Federal Reserve balance sheet. And as you can see, they're trying to shrink things. They had to pop things up for a minute there. But we're starting to see the balance sheet continually shrink. This is them no longer buying treasury debt. So there's going to be pressure on yield. Yield will continue to move higher as long as there's a big deficit and there's no customers to buy that. Where do they get these customers? People have to start saving more money. Big chunk of these people, the boomers, are retiring and using that money. They're no longer saving. So you really have to shift people in order to get that savings taken care of to contain that yield. One of the things that we're seeing, and this makes a lot of sense, and I've been kind of talking about it on my channels, people are getting out of the stock market because yield is too low when you can buy the 10-year treasury like you can. Here's a good look at the TLT stock itself, and as you can see, shot up over the past past week simply because of all the shifts that have happened. There were 3 events last week. Of course, the Treasury announcing what they announced. That was actually probably one of the biggest things. Second, the Federal Reserve on Wednesday. Then third, non-farm payrolls is showing that the economy is contracting somewhat. But as we look at this chart, we're heading right back down. And I've been saying this on TLT stock. If you want to play interest rates, this is an excellent vehicle. There's also TMF. I played a little bit last week going into what happened with economic data. Made a couple pennies. I'll take it all day long. I expect we do TLT. I expect to kind of continually move lower and lower and lower again. Bounce around a little bit. We'll get some positive news. We'll get some negative news. I do not expect a major rally. Did you see the deficit? That's paper. It's got to hit. Someone has to buy that. Your 2 biggest customers are no longer buying that. This will mean that price has to go down, yield goes up, TLT stock, TMF stock, they both fall further. So I expect we'll probably kind of moderate, go back downward, and kind of slide sideways. The 10-year, of course, falling pretty sharply. The yield you can see there, heading back up. I don't know that we're going to see 5% again anytime soon. We need more information. Given right now, I see a slow contracting of the economy, which is pretty much what the Federal Reserve had been targeting, a nice sort of soft landing. We'll see if they can actually pull that off 100%. But with the deficit the way it is, and no one buying that supply, all that paper, yield is probably going to head back upward. But I expect we'll probably be stuck in this range until we get more information. Now, next Monday, of course, we get inflation reports. And if you see any kind of tip upward inflation, things are going to get ugly in the bond market. I don't know that we necessarily see any big problems moving forward with inflation. Yeah, we might see a little bit of a tick upward. But overall, what I see happening with inflation is a long, slow move lower. Everybody's expecting interest rates to move lower faster. Although the Federal Reserve has said higher for longer, I expect inflation hangs out for a long time, and because of that, interest rates will remain higher for longer. TLT stock, TMF stock are both going to sort of moderate sideways for a minute, unless we get more information. But with geopolitical concerns, there's always something that could pop in there. Finally, here's a long-term look at U.S. Treasury bonds. This is the 10-year, of course, again. And if you go backwards and you look right around, say, 2004, 5, 2001, 2, 3, 4, 5, 6, and 7, these are fairly normal numbers. We were in an abnormally low interest rate environment for a couple reasons previously. There's a lot of, it goes way beyond this video. Of course, COVID was one of the things after the 2008 financial crisis, but there are other factors. Getting back up to this level with the 10-year is more getting in line with normal sort of parameters for the economy. Will we stay here? That depends. Let's see how growth continues with the economy. We just printed 4.9 on GDP. We're probably going to see some contracting, and we'll probably see a lot more sideways movements. Interest rates will remain higher for longer. Stocks will adjust, but so will the economy. This is probably going to be the new norm. Inflation will eventually get down to where the Federal Reserve is looking for. I have said before, and I continue to say, they're probably going to have to raise interest rates maybe another 25, 50 basis points, kind of get sort of those last little fine-tuning moments there for them. We'll see how that plays out. Nonetheless, make sure you hit that like and follow button. I will continue to put information out on TLT stock, TMF stock, of course, the bond market, SPY stock. Broadly speaking, these are things that I trade on a regular basis. See you in the next video.